Hi and welcome. My name is Patrick Bratelius and I'm an equity analyst here at ABG. Next company to present is Catella, and with us today we have CEO Christopher Abrahamsson, CFO Mattias Brodin, and IR Michelle Fischer. Take it away.
Thank you, Patrick. Good afternoon, and thank you for joining us today. I am Christopher Abrahamsson. This is Mattias Brodin and Michelle Fischer. I will start the presentation by introducing and giving an overview of the revitalized and now completely property-focused Catella. Following that, I'll go through a brief highlight of our Q1 results that was released on May 6th. And after that, we'll open up for a short Q&A moderated by Patrick and the ABG team. So if we go to page 2, next slide, there we go, wonderful. So today's Catella operates in 3 different segments within property-focused business areas: investment management, principal investments, and corporate finance. We manage 126 billion Swedish kronor as of the end of Q1 in investment management, which is our pan-European investment management platform, out of which 75% of assets under management are managed in property funds, and the rest in various asset management mandates across Europe. Principal investments is where we invest our capital, our equity effectively, into a broad and diversified portfolio of investment projects together with our partners. As of Q1 2022, the project development companies and project management companies are also included in the segment to give even better transparency between investment management and principal investments. And corporate finance is our real estate advisory and brokerage arm with leading positions across Europe. And I would also want to highlight that corporate finance is an important advisor to our other 2 business segments in a lot of transactions across Europe. If we go to page 3, really briefly, by having a pan-European reach and across the property segments in various ways across the balance sheet for our investors, we can also benefit from internal synergies, and that's something that we've been working on a lot over the last couple of years. As mentioned, corporate finance can be an advisor to both principal investments and investment management when it comes to buying and selling assets and providing market intelligence. Principal investments, our development projects there can also be sold into funds, and we have funds that have our internal asset management mandates as well, which means that we can manage our own assets without leaking fees to third parties. And I think maybe most importantly, a lot of co-investments that we make through principal investments will open up new and larger institutional asset management and other mandates across Europe in investment management. So we're starting to realize more and more of this, and I think this is something that we'll start to talk a little bit more about value creation in coming quarters. So if we go to page number 5, describing investment management in a little bit more detail. So in this segment, so we link external capital, and Catella is pretty much exclusively institutional capital into European property. So we link the external capital with real estate investments. So our property funds and asset management mandates exist in a broad range of asset classes and geographies across Europe. So we have a growing portfolio, which I'll go into a lot more about the growth and the future prospects, with I'd say great diversity in both asset classes and risk profiles, and long-term sticky institutional capital, which is very important for our long-term profitability and baseline. We've grown this business since really 2015 to manage, as I said, 126 billion Swedish kronor So besides acquiring real estate assets into funds and mandates, we also are an active manager and developer of properties and a whole actually new areas and cities, yielding good risk-adjusted returns to our investors. On page 6, we'll show a little bit about the history of investment management. So over the last 7 years, investment management grown AUM on an average of 23% a year. And during 2021, we continued to deliver significant growth with strong and improving underlying profitability. You'd say investment management really is the core growth engine of Catella. And we have a clear strategic focus on raising new capital and particularly into sustainability assets and products across Europe. We can see very, very strong growth in the last couple of years specifically, and particularly into our green residential funds. A little blip here in January of 2021, we divested our French asset management operations, reducing the baseline from 2020 onwards. And we've also exited a number of low margin mandates in certain European countries. But despite this, we delivered a very strong AUM growth in 2021 and continued so in the first quarter of 22, and a full year operating margin last year of 23% in the segment. I think investors into our products are mainly, as I said, European institutions that are attracted. I'd say, we're selling our historical performance, but a little bit of our niche is we have very, very strong local presence in every market that we operate, both through our corporate finance and asset management platforms that provide a baseline for and competence and intelligence in each local market, giving our investors further confidence in our ability to deliver these above our peer sector returns. And the growth here, it really has delivered, an increasing and steadily increasing and expanding margin, where a fixed fee compared to a fixed cost has displayed a pretty strong leverage on our cost base. The operating margins keep expanding, which gives us a relatively predictable future earnings stream from investment management. So if we go to page 8, I'd like to move on to principal investments, our newest business area. We deploy our own capital here into real estate investment projects, primarily with partners. So we're never, hardly ever at least, alone in a project of scale. And currently we have 16 projects in 6 European countries, spanning across asset classes as logistics, residential, office, and mixed use. So a pretty diversified portfolio, both from an asset class and geography perspective. And the overall target for Catella here is, above all the synergies that we've already discussed, to develop a standalone IRR on average over the longer period of 20% on our capital. Until today, we have delivered significantly in excess of this, actually at 50% IRR to date. But I don't want anyone to have that expectation going forward, but we are at least delivering above our own expectations and have a really nice, strong portfolio going forward. If we move to page number 9, we can, as I said, besides generating material profits now in the last couple of years on a standalone basis, the principal investments also unlocks value to the rest of Catella. The sourcing of projects are done by local partnership, our local teams, with real deep knowledge, which they get not only from their own experience and their own teams, but also from our asset management platforms and corporate finance intelligence. And even though, with 16 investments to date of about 1.3 billion of equity, so each co-investment is sometime, on a moderate size because we want that risk diversification. and a timeline of delivering projects that are not too choppy. Even though they're moderate in size, they can unlock a lot bigger mandates, so that if we go in with, say, 5, 10, 20% of the equity, we will still have the development mandate, an asset management mandate, and sometimes the sell side mandate on the entirety of the invested capital, which gives us a nice fee leverage model. Of course, on an arm's length basis, we can also sell a completed project into our own funds. And so overall, by deploying our equity into various projects across Europe, we're not only building up a nice portfolio of capital gains, but also recurring mandates over time for the rest of Catella. We go to page 11, and we'll turn to corporate finance, sort of the heart and the beginning of Catella. Corporate finance is a leading advisor in the pan-European real estate market. We have about 200 colleagues across Europe, and a target of maintaining or achieving a top 5 position and a very strong niche delivery in every market where we operate. The main line that we do is large scale / complex buy or sell side transaction advisory and brokerage. But we have in recent years moved into higher margin businesses such as debt advisory and complex capital markets transactions. And we also have in certain countries a bit more recurring revenues coming from valuation mandates and residential developments, which is quite unique compared to our peers, I would say. If we go to page number 12 on corporate finance, still, one of the key differentiating factors here is a strong local expertise. And I would also say a very, very close partnerships in each countries where we are. We have partnerships and managing directors have been with us for 20 years. And coupled with the pan-European market intelligence and the reach of a coordinated group, not in sort of a franchise model, which is very common in the market, I think we have a much stronger network than some of our peers. We have a long history in the markets where we operate and a broad offering from smaller scale, but most of them big buy and sell side transaction up to complex debt advisory and IPOs. Corporate finance, again, also provides significant value and intelligence to all our other investment management and principal investment decisions throughout Europe. So let's go to page 14 and just a quick highlight of our Q1 results we released a few weeks ago. On a group level, we divested our remaining shareholding in Catella mutual funds in early January. And thus, we basically completed the transformation that we began in 2020 of going from a broad range of investment businesses and financial services into a property-focused company. And moving ahead, that really now enables us to focus on growing and refining the Catella that we present today with businesses that are much more tightly linked, have a lot more synergies, and then we can now focus our efforts, especially at a group level, on growing and doing business development in the areas that we wish to grow in. To support additional growth and synergies, we also entered into an agreement to acquire the majority stake in the investment management and development management company WPP in Poland, thereby establishing sort of Catella Poland for real. We have some assets already in our funds in Poland, but this gives us the opportunity to take over the management of those assets. We have acquired an existing portfolio of some size in AUM and a great skilled and experienced team that also gives us the platform to work with principal investments, equity investments in Poland, where we now have a platform for growth. Very excited about that. It's a key strategic market on the European landscape for us. And we continue to have a very, very strong liquidity position. We had 1.1 billion of cash at the end of the first quarter. And I think over the last 12 months, we've used our balance sheet a lot more effectively. We have chosen to leverage our investments less and using excess cash since we have such quick turnaround in some of our development projects. And again, having a strong balance sheet and liquidity position where the market is today, we think is becoming more and more important. On investment management, we continue to deliver stable growth in AUM. We're now at 126 billion. And even though the growth was, I'd say only, but 3 billion in the quarter, Q1 is seasonally extremely slow in our market. But on an annual growth basis, that's still a very healthy number. And importantly, we kept increasing our operating margins. And to further focus on growth here in the right areas, especially with the sustainability ambitions that we have as a group, and the focus of our investors is really moving rapidly, and it should, into these types of products. We launched our second Article 9 dark green fund, which is called Elithis Towers, which is the world's first energy positive residential impact fund, where we will, together with our partner, Elithis Group, develop 100 energy positive residential buildings, starting in France and spreading across Europe. We're very proud of this, and to further stress how much capital and how much success we've had in this field by being I would say a front runner, especially in residential dark green products. Our Catella European Residential 3 fund, which is also an Article 9 dark green fund, has reached over 1 billion euros of assets under management. And looking ahead in investment management, we remain well positioned with over 12 billion Swedish of uninvested, unlevered capital ready to deploy in the right opportunities. Principal investments, we completed the first sale from our InfraHubs logistic portfolio in Sweden, which resulted in an IRR and an equity multiple far exceeding our group targets of 20%, and confirms the business model of developing really solid, modern, sustainable logistic properties with first-class tenants and in grade A locations. We generated a total profit of 106 million, plus an additional 30 million to be recognized when the installation of the solar panels on the roof is completed later this year. An additional 3 InfraHubs projects in Sweden are being completed and planned for sale in 2022. And all in all, we expect the sale of 7 projects out of our portfolio in 2022, out of which the Cactus Towers residential development project in Copenhagen will be the biggest. In corporate finance, following the divestments of mutual funds and the wind down liquidation of our bank, etc., we also performed a strategic review of corporate finance, resulting in a difficult decision to close down our operations in Germany and the Baltics. However, over the last several years, these platforms have not contributed materially to our synergies and have accumulated significant losses to the group, which means the decision is hard, and it impacted the first quarter earnings negatively. But on an ongoing basis, we should see much stronger underlying operating profit margins in corporate finance as a whole. And we are now focusing completely on our 5 really big, strong European markets and pan-European debt advisory, where we see an increasing demand as credit markets are tightening and refinancing needs become more urgent in the market. And as a final point, it's worth noting that the sale in InfraHubs in Norrköping, very successful, also was done as sell side on an arm's length basis by our corporate finance team in Sweden, further highlighting our synergies across the group. So let's go to page 15, a little bit of a summary of the consolidated results in Q1. So very, very happy to continue to deliver a strong quarters here. Revenues grew by 200 million year over year to 581. Operating profit grew dramatically to 111 million after being negative the same quarter last year. And we delivered a very, very healthy operating margin of 19% on a group level. Even though earnings per share were down fractionally, last year's earnings per share were impacted by a sale of our French platform that yielded a profit in financial net of 130 million. And we had a slight revaluation of our runoff loan portfolio in this quarter, 2022. If you adjust for those effects, those one-time effects, our earnings per share actually grew by 1.56 krona on a year-over-year basis, which is we're extremely proud of. Investment management, as we've pointed out a couple of times, has grown to 126 billion, which has been growing by 17 billion in the last 12 months, and stable operating margin in the 20s. And I'd say that the really key thing to point out in Q1 was we delivered a profit margin over 20% without any material variable or performance fees. That really shows the strength of our fixed fee to fixed cost model with the size leverage that we have now in investment management and continue to grow. In principal investments, obviously we had one significant gain on sale, but we also deployed another 200 million into various projects. However, our landmark development project, an office tower in Düsseldorf in Königsallee, was refinanced, thereby reducing our equity, but you know, moving that project healthily forward. And at quarter end, as I mentioned earlier, we had about 1.3 billion invested in 16 projects across Europe. Corporate finance, Q1, always very slow. We had a seasonally, I would say, normal quarter. But when you adjust for the one-time restructuring costs of exiting in the Baltics and Germany, you'd see, when you clear that out, an underlying improvement of margin of 20 million year over year, which highlights the continued strength we have in our remaining operations, and which we will now focus on growing, and also to connect further with pan-European mandates, especially in debt advisory. So if we go to the last slide, slide 16, before opening up for Q&A, just highlight where Catella is today from our perspective. So we've shown again that we have a very strong momentum in investment management with significant opportunities for further growth with uncommitted, unlevered capital of 12 billion to be invested. We're excited and very encouraged and proud of our investor interest and the money flowing into our sustainability-focused funds and our dark green funds, which we continue to launch. To further grow and improve the underlying profitability in corporate finance, we've exited a couple of markets and can wholeheartedly focus on where we want to be and strengthen the market positions in our remaining markets. After the quarter ended, we agreed to acquire the majority of Warsaw Property Partners. And as I mentioned, this is a really synergistic existing platform that gives us both a strong platform to grow from in investment management and principal investments in a new market for Catella. And a final point, we made a first successful sale of logistics assets in Sweden. And I would say with the remaining development projects for sale this year, we will see a strong profit growth in 2022 and an additional strengthening of our balance sheet going forward into an interesting and challenging market. And with that, thank you all for listening, and would like to open it up for questions.
Thank you, Christopher, for that presentation. Yes, let's start off with some Q&A before we wrap this up. Your AUM has grown with a CAGR of 23% since 2015. The operating profit within property investment management has during the same time grown by a CAGR of 45%, I believe. Can you talk a little bit about the future scalability within this operational segment?
Sure. I think we do have existing platforms. So the infrastructure, both at group level and especially in our biggest investment management platform. So Catella Residential Investment Management based in Berlin, Catella Real Estate AG based in Munich, which is commercial, Catella APAM in the UK and Ireland, our biggest platforms in investment management. They have reached scale now where launching new funds and mandates really means that they have to focus on fund management, portfolio management, and asset management, and really very limited growth in the back office and other functions. The offices exist, and very little growth is needed in that cost base. Naturally, we are still investing in some, especially in ESG resources, and a little bit on the capital raising side, but that's all growth related. So yes, there's still a lot of leverage to be had on the operating margin side. I think what we have left to do is reestablish in France, where we had a large portfolio before, which we worked actively with, and to get some of our moderate size asset management platform across the sort of 500 million to $1 billion hurdle of asset under management, where you really get the leverage, and there we think we can continue to expand our margins.
I see. Thank you. Then, as a final question before we wrap this up, perhaps you can talk a little bit how you see the cost inflation impacting the divestment of your coming principal investment projects, please.
Sure. I think on the cost side, we're well positioned. We have fixed construction contracts for anything that's under development right now and being positioned for sale in 2022. So the impact of development cost inflation is going to be limited. There will most likely be a slight impact on the exit pricing, given where interest rates have been moving. We can see that in certain areas in the market. But we have great first-class assets with strong investor interest. So even though maybe the exit price will be marginally less than what we envisioned 2-3 months ago, it's still a very, very healthy margin, and we're still projecting IRRs above our hurdle or above our target. So I think that the impact for us is more on the exit pricing rather than the cost, where we are protected, which is very important. And secondly, I would say what we're doing is also divesting and putting cash on our balance sheet in preparation for future acquisitions or developments where we're not really exposed in the second half of the year in real development costs. So we feel pretty good about that timing.
Sounds interesting. Unfortunately, we have run out of time, so I would like to thank Christopher, Matthias, and Michel for this presentation, and thank you so much for listening in.
Great. Thank you, everyone.